What is going on, everybody? Welcome back to another YouTube video. In this video, I'm going to show you the exact strategy that me and multiple other students have been using. And again, I've given this to so many people, and it's just the amount of people that don't use it. So I've tell you what, I'm going to give it to you for free, 100%. You don't owe me nothing like that. What you're going to need to be is disciplined. Follow the rules to it. Know when to trade and when not to trade, which I'm going to cover in this video, and then stick to the rules, and you are going to make money. Even if you have a loss, which this is trading, you're going to have a loss every now and then, that's fine. But if you don't make money with this, it's because you're not following the rules. And again, I've got multiple people doing this now, and again, that I've given it to for free. So with that being said, let's go on ahead, cue the intro, and let's get into the strategy. Dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, you guys see that we have Thinkorswim up like normal. You guys know I like to trade on Thinkorswim, and I like to chart with Thinkorswim. I actually use Tradevate quite a bit to trade futures on, because if you guys go to use TD Ameritrade, you're going to understand that, oh, they want a lot more money for you to be able to trade it. And that's okay, that's their rules. But again, if you're struggling with a small account, you know, 500, 600, 700,000 bucks, you're going to want to go to like a Tradevate or a NinjaTrader. Now, if you run on Mac like I do, you're going to want to go to Tradevate, and it's got a mobile app, which NinjaTrader doesn't have, but that's for a completely different video. I want to go over here, and we have this chart here. We have ES pulled up. So if I actually, let me show you this here. There's ES. So let's pull this back down right here. So we are going to pull up what you're going to need here. So this line right here, this blue line that you can see that's following, is a 200 EMA, or moving average exponential. It's a 200 period moving average exponential, and this is going to give us some direction. We're going to go over that as well. And then the next thing you're going to need is a MACD. If you have any sort of trading platform or anything like that, they all have the MACD. So these are not custom terms and things like that you know you'll never be able to get, or you have to code yourself. No, these are both very, very basic things. TradingView, I mean, every single platform has these. Even Robinhood, I believe, now has these if you do the web version. So when we come down to this, we are going to move the chart to a 1 minute chart. So a lot of people are going to instantly not like this. Now listen to me, because these are the specifics that you're going to need before we get into this. So you are going to have a bracket order on every single order that you place in this strategy. The first thing is going to be, you are going to set your stop loss, meaning the max you're allowed to lose is 7 ticks on ES. And again, I only trade this on ES. Slow days, good days, fast days. I think our average trade is about 2.5 seconds. I'll round it up to 3 seconds right now. And you're going to get to understand why, because it's a little bit more complicated than just using the MACD. But it's super, super simple. So 7 tick stop loss, 2 tick profit target, meaning per contract it's gonna say $25, but realized profit after commissions you're looking at about $20, depending on what brokerage you're using and what commissions they charge. Now again, if you can use $1,000 and make $20 a day, all of a sudden, you know, that's $50, you're at like a 5% return every single week. And if you compound that and get that to 2, 3, 4, 5 contracts, obviously you can do the math. 10 contracts, making $200 a day, that's 50 grand a year. All of a sudden, half of America has replaced their day job. But this strategy is what we want to get into. The 200 EMA is going to tell you whether or not you are going to be looking for a long, or if you are looking for a short position. So today we are going to open it up here to this short amount of time frame. So the next rule that you're going to need after you have those other two rules is you do not trade the market open. I am 100% for everybody watching it and being able to understand and kind of see how the market's moving, because you get these giant spikes like you are right here. But we don't really need to get into that volatility with that. We need a simple direction is what all we're looking for here. And so you get the 200 EMA, so you never go against it. If the chart is underneath the 200 EMA, you're looking for a short. If it is above it, like it is right here, you are looking for a long. And we're going to go over this here. So I'm going to find a trade, and it's actually one that happened this morning. So we don't want to trade the open. If you want to trade at 9:45, sure. I'm probably not taking many trades there. I like to wait till 10 o'clock Eastern Standard Time. If you're in Central Time or Pacific Time, you do the math. So don't basically trade the first 15 to 20 minutes. I say the first 30 minutes and then go and trade. So we are zoomed in here pretty good. So I'm going to show you this trade that we took this morning, me and another student, and I was on the phone with him while it happened. Yes, I do mentor you guys and walk you guys through step by step if I need to. Now, what you're going to use is there's a zero line right here, guys. This where it switches from red to green every single time. That's a zero line. Where this arrow is, that is a zero line. Now, what you are going to do is if it's above it, you are looking for a long. But if it's down here below it, you are looking for a short, meaning you're hoping it goes down. So all you're going to do is you are looking for right here. You are still short. You are below the 200 EMA up here, and you are looking. It is crossing downwards. Now you got to make sure this candle confirms. So I would let this candle completely go. Now you're going to be like, oh, well, this candle opened up and it went green. You're not wrong. You're not wrong at all. The part of this strategy that makes it so simple and so fast is that you're only looking for 2 ticks. You're not going out there trying to hit 10 ticks, 12 ticks, 15 ticks, and make $200, $300, $400, $500 in a trade. You can do that, and I've done it with $1,000 and doubling accounts and things like that. You can do that, but for the most basic person to get into this strategy, this is going to be the strategy because you're not looking to make a killing. You're looking to not be greedy. You're looking to hit these trades and be in and out as fast as possible, guys. And that's what I think most traders should actually be looking for. Not the big trades, not a strategy that's going to allow you to swing trade and have the possibility of making a lot, but just getting into these short, simple, fast trades that accumulate you money. And I think that's something, if you get into that habit of winning and winning and winning and winning and being disciplined, it's going to help you more in the long run than hitting a $500 trade and then losing the next 5 trades. So this one, we literally entered it, and yes, the candle's green, but for instance, at the open, you got 2 ticks out of this, guys. This moved a $2 move here technically on the ES downwards, maybe slightly a little bit more technically, but it opened up and you were able to hit 2 ticks. And I know this because I was in it this morning. As soon as that candle opened up, I hit the button and I got filled not seconds later in order to make my $20 per contract. Now, of course, I had more than one contract, and you can trade 10, 20 contracts on these, just so you guys are all aware. And it is a scalable business. The ES and the futures markets are the most liquidable markets on earth. That's what everybody says anyway, and that's what statistics say anyway. So, as you can see, it does rebound up pretty quickly. But we don't care because we scalped our 2 ticks right here going down into that 3,900 area, and we didn't care, guys. 2 ticks is 50 cents because they go in 25-cent increments on ES. And you guys can probably use this on other ones. You got to remember the volatility on like NQ and things like that. But that is the strategy. Now, the one thing you're going to see here is like this one is not a trade. Let's switch over to this other tool so I can circle it. So this one, oh, come on. This was a trade. That's a good one. This is not a trade. It's a bullish mark, and it's going, and it's the future is below the 200 EMA, and it's below the zero line. So we are not taking that trade. So we're going to remove this. Now, the next one is a trade, actually. I mean, you could have taken this one, and if you look at it, you actually probably would have did pretty well. And I'm going to circle this here like that. So this was actually a trade here, and you probably should have made money. I don't know because I actually did not trade it. But again, you're within 30 minutes and you got 2 trades and you could have been done. A lot of you only need to take 1 trade. And again, here's another one. Here is another one, guys. Now, again, I'm not saying go and take 10 trades a day. I don't think the average person should go and take 10 trades a day. I really, really don't. I don't think it's a plausible term. But now, as you see, right here could have been another trade. Now, both of these lines go above the 0 line right here. So as you can see, the second line is going over this 0 line. Now this would normally be a trade. Why would this normally be a trade? Well, because they're both going bullish. Now why is it not a trade? If you've been watching, it's not a trade because ES is still below this 200 EMA line right here. And this 200 EMA line is going to save you on a lot of trades. I've seen people do this strategy without it, and it just makes life so much easier. Now, the market does pop up, and it gets above the 200 EMA. So if we got a long signal down here on the MACD, we could have. But as you see, it gives a short signal, and then all of a sudden goes below there. But one line went below the 0 line, but the other one did not. So again, no trade. And then all of a sudden, we get our trade. Now this one was a very, very solid one from the looks of it. I did not take this trade, full transparency. Again, I did not take this trade. So that's why I'm telling you I did not take this trade. But you would have entered on this candle right here, and you would have gotten your 2 ticks. I'm about guaranteed. Again, I did not trade it, so I didn't see the market. But as you can see, you're both over the 0 line. You're over the 200 EMA right here. So this is a bullish signal. And then here's your bullish signal here to get in. 2 ticks and you're out. And then again, you have another one right here. And you just flip-flop that for the short time as well. So right here is the example, and I just want to give you one example. This is going below the 200 EMA here, and it's kind of simultaneously, so I would have actually taken this one. And again, you don't have to. If it doesn't fit perfectly, don't take it. That's okay. Be picky about them. This one, you have a very, very big red candle in here, and this one, obviously, you can see it started pulling down pretty quickly as well. I probably would have taken this one here short because, again, you have 200 EMAs here. We already broke the 200 EMA going down, and you have both lines going across the 0 line showing a negative trend. So with that being said, guys, that is the strategy. And you can see here, and we'll pull it back so that you guys can see it a little bit more here. We want to go to about 10 a.m. There's multiple trades in here for you guys to make. Looking 1, 2, 3. That one was not a trade, so we're going to get rid of this. This one was a trade, so 1, 2, 3, 4, 5, 6. So you actually could have taken 6 profitable trades today. Now, do you need to? No. No, you don't. I think a lot of you guys should take 1 trade, be done with it, be happy with it, and move on. But this is a very, very simple strategy that absolutely every single person can do. And I think that's important because everybody wants to overcomplicate things. Guys, we've been doing this for months now. We've been back testing it for months. I have not found many days that I'm not profitable on. You're like, oh, but it's got a 7-tick drawdown. Yes, guys, but you're hitting profits so much faster than you are taking losses that your wins are going to escalate your losses dramatically. And if you guys want to ask questions, feel free to DM me. You can DM me on Instagram. It's linked below. I'm always here to help you. If you guys don't have my Instagram, I'll put it up here somewhere. And I believe my actual Instagram is MC_investing_. Find me on there, DM me, ask me questions about it. I am more than happy to help you out. Leave a comment on this video. I will talk you through exactly what you need to do. So with that being said, thank you guys all for watching, and I will see you guys.